Hello creators, and a warm welcome back to Mind Your Business. This is the channel where we empower you to treat your creative passion like the real business it is, helping you build sustainable income and true professional freedom. We believe that being a content creator is a real job, and with the right mindset and tools, you can transform your social media presence into a profitable enterprise. Today, we are going to step into the world of cryptocurrency, but we are going to approach it with the same long-term, business-minded perspective we apply to everything else. The central theme for our discussion is a timeless piece of wisdom that is especially true in the volatile crypto space. Time in the market will almost always beat trying to time the market. For many of you building your brands, your most valuable resources are your time, your consistency. You show up every day to create content, engage with your audience, build something meaningful, piece by piece. This same philosophy can be applied to building long-term wealth. The crypto markets can often feel like a chaotic storm of flashing numbers and dramatic price swings, tempting many to make impulsive decisions. Let's start with a clear snapshot of the market as of today, October 19th, 2025. It is important to remember that these numbers are in constant motion, so think of this as a brief check-in rather than a fixed reality. The main story this week revolves around Bitcoin. After a recent dip that brought its price down to the $103,000 level, we have seen a significant rebound. Bitcoin is now actively testing the crucial $110,000 resistance area. This is a pivotal moment that has many market participants watching closely. A successful breakout above this level could signal further upward momentum, while a failure to push through could lead to another downward correction. The key takeaway here is the uncertainty. No one, not even the most experienced analyst, can say with absolute certainty what will happen next. Will Bitcoin break out and begin its next leg up, or will it break down and retest lower support levels? Only time will provide the answer to that question. This is precisely why our focus today is not on predicting the next move, but on having a strategy that works regardless of short-term volatility. Instead of getting caught up in the anxiety of the moment, we can observe, learn, and stick to our long-term plan, which remains unshaken by these daily or weekly fluctuations. Looking at the broader market, other major digital assets are also at interesting price points. Ethereum is holding strong, trading near the significant psychological level of $4,000. Elsewhere, BNB is priced at approximately $1,100, showing its continued relevance in the ecosystem. We also see XRP trading around the $2.4 mark, a price level that its community is watching with keen interest. Finally, Solana, a favorite for its high-speed transactions, is currently priced just under the $200 mark at about $189. These are the major players on the board today, each with its own story and community. Again, these figures provide context, not a call to action. It is easy to see a price like Bitcoin at $110,000 and feel like you have missed the boat, or to see a dip and feel a sense of panic. Both reactions are driven by emotion rather than strategy. A calm and measured approach acknowledges these price movements as part of a larger, longer-term cycle. The real work is not in guessing the direction of the next candle on the chart, but in building a resilient financial plan that can withstand the market's inherent unpredictability over many years. Now, let's explore the core idea for today: the critical difference between time in the market and timing the market. This is one of the most fundamental principles of successful long-term investing, yet it's often ignored in the excitement of crypto. Timing the market means trying to predict future price movements, to buy at the absolute bottom, and to sell at the absolute top. It sounds appealing in theory. Who wouldn't want to buy Bitcoin at the lowest price and sell at the peak? The problem: it's practically impossible to do consistently. Even professional traders with sophisticated tools often fail. Trying to time the market often leads to stress, anxiety, and poor decision-making. You might sell too early and miss significant gains, or wait for a dip that never comes, leaving you on the sidelines as the market moves higher. It becomes a game of chasing prices, driven by fear. The fear of missing out, or the fear of loss. For a busy creator building a business, constantly monitoring charts and news eats mental energy, and distracts you from creating valuable content and engaging with your community. In contrast, time in market is patience and consistency. It's based on a simple premise: valuable assets tend to appreciate over long periods. Instead of hunting perfect entries and exits, you invest and hold for the long term, letting your assets grow through the market's natural ups and downs. This removes emotion from the equation. You're not reacting to daily news or to every price swing. You're trusting your long-term plan and the fundamentals. It's a much calmer, more sustainable path. Think of it like planting a tree. You plant a sapling. You don't dig it up every day to check the roots or worry about every cloudy day. You give it consistent water and sunlight and trust time to do the rest. Years later, you have a strong, mature tree. Investing with a long-term mindset works similarly. Make regular disciplined contributions, let them compound over time, and you're planting seeds for future financial strength without the daily stress of trying to outsmart the market. This mindset aligns with the steady, consistent work you already do as a creator. So, how do you practically apply the time in the market philosophy? One of the simplest and most effective methods is a strategy known as dollar cost averaging, or what the Bitcoin community affectionately calls stacking sats. Sats is short for Satoshis. There are 100 million Satoshis in one Bitcoin. Stacking sats simply means accumulating small amounts of Bitcoin on a regular basis, regardless of price. This approach automates your savings and removes the guesswork of timing buys. The beauty of dollar cost averaging is its simplicity. You commit to investing a fixed amount at regular intervals, such as $50 every week or $200 every month. When Bitcoin is high, your fixed dollar buys fewer sats. When Bitcoin is low, that same dollar buys more sats. Over time, this averages your purchase price and smooths volatility. You buy more when prices are low and fewer when they're high, a disciplined way to accumulate, without emotional trading. For a content creator with fluctuating income, this is especially effective. Set a baseline amount that's comfortable and add a little more during months with higher earnings from brand deals, product sales. The key is consistency. Make it a regular habit, like paying a subscription for a business tool. You're slowly building a long-term savings position in a global decentralized asset. Convert part of today's income into a potential store of value for the future. Think of stacking sats as your personal wealth-building program, running quietly in the background. It doesn't require watching charts all day or stressing market corrections. Set the plan in motion and focus on growing your creator business. Over months and years, small, consistent purchases can add up to a significant holding. A disciplined, low-stress approach to participate in Bitcoin's potential upside. It is about playing the long game. As you venture into the world of cryptocurrency, it is absolutely essential to make security your top priority. The decentralized nature of crypto means that you are your own bank, which offers incredible freedom but also comes with great responsibility. Unfortunately, the space is also filled with scammers and bad actors looking to take advantage of newcomers. Promises of guaranteed high returns, fake giveaways that ask you to send crypto first, direct messages asking for private keys, or your recovery phrase. Be extremely skeptical of anything that sounds too good to be true, because it almost always is. The single most important step you can take to secure your long-term holdings is to use a hardware wallet. These devices keep your private keys, the password to your crypto, completely offline. We strongly recommend reputable brands like Ledger, Trezor. When you set up your hardware wallet, you will be given a 12 or 24-word recovery phrase, also known as a seed phrase. This phrase is the master key to all your funds. Write it down on paper, stamp it into metal, store it in a secure, private, offline location. Never, ever store it as a digital file on your computer or phone. Never share it with anyone for any reason. Use strong, unique passwords, consider a password manager, and enable two-factor authentication, Google Authenticator or Authy. Avoid SMS due to SIM swap risk. These extra layers of security create significant barriers for anyone trying to gain unauthorized access to your accounts. Finally, this content is for educational and informational purposes only and is not financial advice. We are sharing ideas and strategies that have worked for others, but always do your own research and consider consulting a qualified financial advisor. Your financial security is your responsibility. As we bring today's discussion to a close, let's tie everything back to the core mission of Mind Your Business. We are here to help you turn your passion into a sustainable and profitable business. We encourage you to view your journey into cryptocurrency through the same professional lens. It is not a lottery ticket or a casino game. It is one potential component of a diversified, long-term wealth-building strategy. Just as you strategically build your brand, secure partnerships, create multiple revenue streams, you can strategically and patiently build your position in digital assets. Treat your creator business like a real job, and treat your investments with the same level of seriousness and planning. The principles that lead to success as a creator are the same ones that lead to success in long-term investing: consistency, patience, a willingness to learn, a long-term vision. Small, steady steps matter immensely over time. Every video you post, every newsletter you send, every connection you make with your audience contributes to the growth of your brand. Similarly, every small, disciplined investment you make contributes to the foundation of your future financial freedom. Your work as a creator is real and valuable, and you deserve to build and protect the wealth that comes from it. We hope this conversation has provided a calm and encouraging entry point into thinking about crypto. The goal was to demystify the noise and offer a simple, actionable path forward. Remember the key takeaway: time in the market beats timing the market. Be patient. Be steady. Focus on what you can control. You can control your plan, your consistency, your security practices. Let the market do its thing while you focus on growing your business. If you found this content helpful, please support the channel by liking this video and subscribing for more tips on building your creator empire. Before you go, we want to thank you for your time and attention. Your support allows us to continue creating this content. You can also support us by checking out our new project, the MYB token, channel token MYB on pump.fun. Always do your own research. Or by grabbing creator-focused merch from our sponsor at 21 Mil Club Store. Standout picks: the astronaut Bitcoin phone case in multiple colors, sleek, functional, and crypto forward. Keep learning, keep creating, and keep minding your business. Secure your future, stack your sats, and never forget that your creative work has the power to build the life you envision. Thank you for listening, and we will see you in the next update. This is not financial advice. Support channel Mind Your Business. Like and subscribe. Channel token MYB on pump.fun.